This is Rick Ackerman, and I'm coming to you from Lancaster, Pennsylvania, live. This is Amish country. I'm visiting with a friend, Victor Reese, who's lived in Lancaster for around 10 years. We went on a gala tour yesterday. It's a beautiful place. They have rolling farmlands, not too crowded, and a lot of the farms operate without electricity, but it's a very peaceful place. And the city of Lancaster itself is beautiful. There are many fine neighborhoods with fabulous old houses. So that's where we are right now. And this is a long road trip. I started north from Florida at the beginning of June, and um, and here we are. I'll be headed back to Florida maybe in a couple weeks just to soak up some of that 95% humidity, and by then the temperatures should be in the mid 90s as well. So, couple things I want to say that Bitcoin is definitely down for the count. I did get into a kind of a Tupperware Bitcoin venture. I was dating a woman who said, "You have to come tonight to this presentation," and it wound up being a Bitcoin or crypto thing. And I'm not going to name the perpetrators here, the name of the company. And it wasn't exactly a Ponzi scheme, but it was very, very cleverly um, arranged so that a non-trader, meaning all the people who were jumping into this, including my this woman, would be unaware of how it really works. The sort of teaser is that you can triple your money if you leave it in for 600 days. But it turns out you're not really tripling your money. You're tripling something they give you as, I guess they don't call it interest, and that's how they get around the regulatory problems, but they call it reward points or some such. And the points are in something, let's call them clodals. So they give you X number of clodals each day, and after 600 days, you'll have 3 times the number of clodals you started with. But don't even think about cashing those clodals for real money. You have to convert it into a type of cryptocurrency that circulates internally, meaning it has no real value outside the venture, but which can be exchanged for some of the more formerly reputable cryptocurrencies like Ethereum. So to get to the bottom line, my clodals were worth, I think, $1.97 not too long ago, maybe a week ago, and now they're worth, I think, 2 cents. And I had to ask the person that sort of guided me through the process of getting into this venture. I'd ask her maybe 37 times the simple question, can I get out? Is there any liquidity? And what is the money that I put into it worth right now? So she evaded that for the first 37 times, 36 times. Then she finally answered the question and said, but don't worry, you'll be able to get out when the price of crypto goes up. So that's why I'm telling you now that it won't go up because this one, not a Ponzi really, um, but when you have too many people at the retail level who are hopeful of getting out even after they've been crushed, it's telling you that we still even had a capitulation bottom, much less some rally, where it increases 30-fold in value to allow people like me and others to get out even. Fortunately, this woman, because she was an early adopter of this, let's not call it a Ponzi scheme, she already took a lot of it out. I think she put in $15,000 initially, and she's already out with a brand new SUV and a very improved lifestyle. But that would not go for many of the people who are in this venture. So it's dead in the water. I just put in a few $1,000s to see how it worked, and I I just neglected a few weeks ago. I would have said cash me out, but I was just busy with too many other things. So anyway, you've got vast the multitudes, the mindless herd is in these crypto schemes, and there are probably about a couple thousand different kinds of cryptocurrencies. And it was always obvious to anybody who thought about it or who understood markets that there would be a rush for the exits. Everybody would be trying to get out of their relatively illiquid types of crypto into something like uh, Bitcoin. But of course, you can't do that. And it wasn't ultimately a liquidity problem that crushed everyone. It was simply a catastrophic decline in the value of these coins. So no rats escaped the sinking ship. So that's where we are, and it tells me that in the psychological frame of reference, that the cryptos have not hit bottom, and that nobody's going to get out alive if you're still in them. And I think I read somewhere where 70% of the people who own crypto, whatever, got in during the last year. So pretty much everyone is underwater now, and that's the way it goes. Um, before we get down to some of your requests, let me mention we had a real winner the other day in the E-mini S&Ps. Um, Let me show you the actual tout, and let's see here. Let's see, put this up here. All right, the tout that went out last Sunday in the E-mini S&Ps. Um, let's get it here. It takes a little while to grind this one out. Um, all right, so the tout that went out Sunday night in the E-mini S&Ps was looking for 3708.50, and the actual contract was at that time a couple hundred points higher. It was 3900 and change, and I'd flagged the number 3708.50 and said that it would definitely be hit, judging from the way bears crashed the midpoint support. When we use these ABCD patterns, the midpoint of that CD leg is absolutely crucial to using the patterns to determine trend strength and even the accuracy of your price target, or let's say its reliability. So we were focused on 3708.50 as of Sunday, and on Tuesday we really crushed it. It came down Sunday, Monday, Tuesday, and the low there you can't really quite tell, but that low right there is 3708.50. So the target hit the low to the exact tick, and if you were in on a bottom tick there and rode it all the way to the top, you had a nice, I think it was maybe a $26,000 gain on a few contracts. Um, as it happened, many subscribers got in off that low, and the initial move, just within minutes of when it hit that bottom, was enough to make good money for subscribers who got in. So some of the analysis, I'm going to offer you a great deal on a package that would give you the mini course on mechanical entries, which is what we use to get into many of these trades. And I'll tell you a little bit about the package at the end of this presentation, but I'm going to be using that type of analysis um, in this request session. So, and you'll see how it works, kind of, but I'm not going to give away the story. You'll have to take the course to get a better idea of how it works and how you can use it. But don't take my word for it. Just by all means, you should take a trial subscription to Rick's Picks and just ask around the neighborhood as far as does this work and are we making money with it. All right, so um, one other thing I'll mention is, and this has been a feature of this bear market, um, the targets are working, but the bounces that we're getting from those targets, the downside targets, are not very robust, and that's a very negative sign. It means that this bear market has not hit bottom, um, and there's just a lot of selling. You know, when you get to a downside target that's taken 2 weeks to reach, the bounce should last for more than the several hours that we're seeing, or maybe a day or so. One other thing I did. We have a guy who comes in the room now and then and leaves these sort of voodoo numbers, targets, and I put out in the chat room a way to play his latest voodoo forecast, which is you have to buy E-mini S&Ps either yesterday or today at the latest to take part in an enormous rally that he expects to happen. I don't see it myself, and I think the E-mini S&Ps are actually going to come down to 3,500 before we get a really significant rally. But I did put out a trade. I didn't give away the proprietary details of exactly how to do the trade, but it triggered. Let me show it to you here. If you want to do it now, you're still getting in for less than the the actual the trade triggered right here off this low, and I used what's called a reverse pattern entry, but it triggered here, and at the time I put it out in the chat room, it had come down to here, but without stopping out the trade. So I said, if you want to get in on the cheap, you can buy it now, and once this thing gets above that high right there, the trade itself will be in the black. So, and I also said that if it should come down and stop out that low, I would attempt a second trade. But again, that's with the caveat that the risk per contract is, I think it was $1,800 or some such. Maybe it wasn't that much. Maybe it was 1,100. But it's significant in any case. So the trade's not for everybody, but I did put out enough details that you could do it without really knowing the method that I'm using. So, all right, with that said, let's see what's on you guys' minds. And again, I'm going to let you know at the end of the presentation how you can get what my marketing director just would call a fabulous value. It's a pretty good value, and I'll tell you about it in a bit. All right, so let's see your questions. Let me haul them out. Oh, good. I don't have anybody saying, Rick, we can't hear you. Rick, we can't see the screen. So that's always a good sign. All right. So our first request is for NVR. They operate a home building and mortgage banking op operation. Haven't been able to reclaim 1987 trend line, uptrend line since losing it last month. All right. So let's take a look at NVR. All right, and I'm using a giant screen here as the chart screen, so I'm not used to that, but let's see how it works. I want to back up a little bit and see what's going on here. Well, I want to back up even more to see what's really going on. Let's see. All right, so we'll look at the daily chart. Okay, well, this is a pretty good view. And just to get some idea of how well it's moved to hidden pivot targets, I'll start with an earlier one that already played out. And we see that it spent a few weeks there at the D target once it finally hit it. Nice rally and then down again. So in order to get a new projection, boy, this thing looks pretty awful, doesn't it? All right, so to get a new projection, we take this pretty wicked little gnarly pattern right here. And I'm not going to give you any rules for why I chose that. I chose it just because it looks pretty cool. Well, that didn't work either. So we're going to slide up to a higher A right there. And what this is saying is that currently trading 36.40, this little pup will get down to a minimum 3482 before it can turn around. So I'm not quite guaranteeing that, but it's a pretty good pattern, and I especially like it because we're the only ones on planet Earth who see it. There's nobody, none of the Gartley guys, none of the Elliott Wave guys, nobody else is using this particular pattern, and certainly not in the way that we do. The way we do is to take note of how it crushed the midpoint support on the way down. That more or less guarantees you that it's going to get to the D target of this pattern. So you can definitely bottom fish down there, And you can do it in any number of ways, including the mechanical setup that I'm going to show you how to access, how to learn about at the end of this presentation. All right, next question. What is your view on gold and silver? I hate them both, and I just like Jim Dines was the original gold bug. I'm the original gold hater. No, I'm just kidding. I like gold and I keep some of it around. I've given most of what I had in coins and gold rounds and things to my sons. And I think that gold, come hell or high water, will do just fine holding its own against virtually any asset class you can think of. But that hasn't been much consolation to bulls who have been with it all the way and who have felt the pain of the slide from this high right here back in March. Uh, the high was 193, and we've come down to 160 something. So that's been a very painful correction. And I see gold more or less as in a buy and hold. It's just in a stagnant bull market. It's really waiting for something very serious to happen, and it may be happening right now. We see a number of things. Um, we're in a bear market for one, but my own chart suggests that interest rates may be near a top. But someone posted a chart of TLT in the chat room today. It tracks the long-term bond, and I'd have to concede that the 108 target that I was using for TLT is so buried that that it could come all the way down several points lower to 99 even, at which point your long-term rates would be up there near 5% or higher. And I felt all along that we'd be in a depression, a global depression, before interest rates in the US hit 5%. But maybe not. Maybe we'll sort of overshoot the interest rate that would effectively kill all business in this world when coupled with amazingly high energy costs. So those two things have already, I think all the geniuses at the firms, Goldman, J.P. Morgan, are still kind of debating what the chances are of a recession. But as you know, we've been in that recession for maybe a couple months now. And rather than listen to Goldman Sachs, I listen to our own subscriber, Matt Barnes, who's in the business of building and shipping pallets. They make shipping pallets, and that's definitely where the rubber meets the road kind of business for determining when business may be in a slowdown. So, so gold hasn't really responded to the huge things that have been going on. It's definitely not a safe haven at this point. Um, and so I can only surmise that it's going to take a true crisis to bring people into gold. And I'll leave it up to your imagination as to what might constitute a true crisis. But at least now we are eating. The food chain, the supply chain is working up to working reasonably well in this country. But when I talk about a crisis, it's one where people are bartering for things that they need to stay alive. All right, so I think we're going lower, and it's not like the bears are really making significant headway in gold and silver either. Uh, and you asked for these two symbols, but just to track something that makes more sense to me, the gold futures, and David Isham was in the chat room moments ago, just making the point that gold triggered a mechanical short there at 1851.10. This is one of those mechanical trades, but it's kind of upside down. And he's right that what you see here, the rally from there to there that got it to the green line, created a pretty textbook mechanical short. So if we were to do that, it would be predicated on minimum downside, meaning that's our profit to 1819.70. That's where we take a profit. The stop loss would be up around there. Um, and the only thing I see that argues slightly against it that would knock this thing down from, let's say, an 8.0 on a 1 to 10 rating scale is the fact that this impulse leg, it's a good one, it's pretty strong, but it's not truly impulsive because the low there did not exceed any prior lows. It didn't exceed this external low right here, let alone the main one there. So that is a sign of a little bit of weakness or timidity on the part of bears, and that's why this is a short. It's a good one, but not a stellar one. So I'm going to suggest paper trading that one, unless you know how to do a camouflage entry. And just to give you a little preview of that, camouflage is where you take the signal, get short here mechanically, but you do the actual trade on the 2-minute chart, and you do it with teeny tiny patterns, A, B, C, D, with initial risk that's commensurate with the size of these patterns. So that's how we do the trade 1851. If you did it just sort of conventionally, saying, well, we're going to short the 60-minute pattern, your stop loss would be up here, and that's a $12,000 initial risk. But when you do the trade, as soon as you get the signal, when you look for a trigger using a chart of lesser degree, meaning you use camouflage, you can get that initial $12,000 risk down to maybe 400 or $500, $800. So that's how we do it. And typically, when we use the reverse pattern in particular, we'll make a little money on trades that go wrong, trades where it just doesn't do what we expect it to do. We've usually cashed out for half um, uh, before we even know that we're wrong. All right. So I have no great expectations for gold or silver, but I do have that target, the short at 1851. We take profits somewhere around there, around 1819, but the actual target on that pattern is 1756.90. So that's as bad as I think it's going to get for gold. I don't think it's going to crack 1700. So, you can call it a bear market, but it's not really. It's more sort of just a nasty forever correction of a longer term bull market. So just to take a quick look at July silver. All right, let's see. It's a bullish sign that silver is about to stop out the point C of this pattern projecting to 20.71 without having quite reached it. So that is bullish, and it means that maybe this rally, it's another reason not to short gold right here mechanically. Silver is looking a little better than gold, and this whole picture here is ostensibly bullish. Not bullish in the way of we're going to new highs, but bullish in the way of this rally has more to go, and maybe we'll get some mileage out of it. I don't know if it's going to go far enough to budge the gold stocks, but hope springs eternal. All right, so let me take this out of that. um, let's see. Any thought on Ethereum? All right. Hey, nice, nice to see you in the room, Crash. I'm glad you could get here. Ethereum. All right. So, not looking great for Ethereum, to to understate the case. All right. So it's been a while since I drew any analytical lines on a chart, but the obvious pattern here is right. Let's see, where was it here? A B C, and let's see if we can get the correct C, just so that. All right, so when Ethereum gapped through the red line, that midpoint pivot, it was, as I mentioned earlier, as I implied earlier, it was guaranteeing us that it was going to fall at least from 18 and change to $7. We were absolutely certain of that here, or I won't say that. I would just say there was a 106% chance of that happening. It's not a good sign that it's hit it and barely bounced and then gone below it. Even so, we tend, because the target is so clear, we tend to do the trade anyway using some of that camouflage that I mentioned earlier. We can test the water here and probably even make a little money on the long side, even if this thing is on its way to the next target beneath 747, which is $3.33. And I hate to be the bearer of bad news here, but that's where it looks like it's going. You know, the gap through the secondary pivot, this pink line is midway between P and D, P being the halfway point of your C D leg. All right, so that gap's not a good sign, and you know, I think it looks like $3.37 for Ethereum, which is not great considering that late last year it was trading over 45 bucks a share. Um, all right, and the point I made earlier that 70% of the people in Bitcoin now have gotten in within the last 12 months. Um, not good. Not good because they're all supply now. They're all in a position of saying, "Oh Lord, please just let me get out with with just moderate losses, and I'll never do it again." Well, that thinking, exactly that kind of thinking, is going to absolutely hobble the market. So any rally that occurs in any of these vehicles, trust me, it ain't going to new highs. All right, so we can take a little pattern here to do what we call a Richie, named after my erstwhile trading partner, Rich Knudsen, which says you can actually try fishing here at the pink line, but probably more advantageously at 429. That's a good place to step in and do some very tightly stopped bottom fishing. Um, we saw a question from Mark. We saw TS earlier. I'm not sure. I think TS stands for trade station, but Fred says audio and screen are good. Great. You know, there's always a banana peel. All right, let's see. GDX. Oh, who cares? No, I don't mean to offend you, Tad, but or Thaddeus. But you know, I mean, I can't give you any good news on this thing. It's just junk. Um, let's see. A request for a God, I am going blind. ABNB. Let's see what that is. ABNB. And if you guys want to, oh, Airbnb. If you guys want to tell me what some of these, we know what Airbnb does, but if you have some obscure stock, I'd be helpful to all of us if you would explain what the company does. All right. So here, the initial uh, analysis would have come from this high right here down to that low there and up to there. Let's see here. All right, and we see that, well, I don't see anything here that's where I'd be saying, oh, I'm sure of this or that. It's a very it's a difficult, challenging picture from my perspective as far as hidden pivot method. And I would have taken the rally up to that green line was a definite short. My guys who've been following mechanical trades or doing them for a while know that any rally that just misses getting to the target but goes no further than around here, but which rallies up to the green line is a short. So we would have had a lovely short almost 100 points above where we are now, but nobody asked at the time, so so I don't guess anybody's got a big short position in Airbnb. All right, so to bring us up to date with this pattern, the kind of maxed out, not not completely legitimate pattern that I would use is right here. Let's see, and hold the line there. All right, this pattern is pretty nutty, and well, I have to say it doesn't even matter anymore because it took 2 days. We hit that target, and we had a little bit of a bounce, and I certainly would have been bottom fishing there. But 3 days later, it's actually crash the target. Now, ordinarily, when it does that, um, I infer that it's just screwing with our brains. Anything that crashes, this isn't really an obvious target because the pattern is so gnarly. But a lot of times, when you have a support that's well known and it just dips below it, it's just to screw with everybody's heads, and then you get a nice rally. And we're as much as waiting for that nice rally in the E-mini S&Ps. So we're in sort of a critical uh, time right now where we're either going to get another big leg down, or we're going to get this rally simply because everybody, all the bulls and bottom fishers, have been stopped out within the last couple of days at targets that were, let's say, if not universally known, they were somewhat widely appreciated. But I don't think that's the case, especially here. There's no 9801 target where everybody, all the bulls got in here, and they would have had to been rebuked with the little rally and then getting stopped out. Nobody even knew about that support, and yet we did, and it's broken through it anyway. So I think I take that as a sign that Airbnb is going to see much lower prices. Um, so we're really in the thick of it. This is a bear market, and you think I'll short the rally. I'll wait till we get some better opportunities. But that's how bear markets can work, really. They don't give you that opportunity. They make you say, they make you be a non-doubter all the way down to say this, to be able to say this market sucks so bad, this bear market is so horrific that we're not going to get that rally. And it's extremely hard to do that. It's extremely hard to just stay short and to not think that when it's in the throes of this kind of rally here, from let's see, from 103 up to 125, you got to be thinking, well, this is the one. It's going to go and go and go. And even I would have given you a target somewhere up there in the 130s range, with a caveat. So I think we're just this thing's getting crushed, really, and that's just going to continue. All right. Let's see. Lots of people want to know about Bitcoin, and I've talked about that enough. I did open the presentation with kind of an overview as to how there's so many people underwater in Bitcoin now that you better forget about the usual snapback rally. And when you see even the big boys taking on water, like Michael Saylor and some of those guys, who's going to lead the charge? Really, for a long while, they basically could hold the fort against unlimited Indians simply because it was a hoax. I mean, the banks were all talking, not even their book necessarily. I think if you kind of follow the money, you'll see that none of these shitheads at the banks, they never even had exposure in Bitcoin. All they were doing was talking about how wonderful it was and encouraging their customers to think it was great, but they were liars. The banks, the institutions, which essentially touched off the craze by mildly endorsing it, with the exception maybe of Jamie Dimon. Um, they were just they should go to jail for that, really. So the banks and a lot of people talking their book, they had very little skin in the game. In the case of Saylor, his cost basis, supposedly someone said it was around 20,000. so so if the big guys are getting crushed, really, you expect the little guys who like me, who have I have my position in Cloddles, and I'm never going to see a dime of, I'll never get a dime of that back. So we constitute just enormous supply, and even guys like Michael Saylor are not going to push through that supply with the kind of braggadocio that he did earlier when everybody was seeing this huge rally. And even I was slightly fooled for a little while because in Bitcoin itself, and I use the symbol BRTI to track it. BRTI is not a tradable vehicle. It is it aggregates the best bids and offers across many Bitcoin related markets. So it's a very good real-time coordinate benchmark for the price at any given moment. But what I was looking at was a big, I mean, you couldn't ask for better symmetry in an incipient head and shoulders pattern. We've got left shoulder, head, and then a little bit here with a low. I was thinking maybe we get a low here, and we wouldn't rally to new highs because this is a head and shoulders, but we would get up to around 60K. And I don't even know why I bothered talking about that because I hate head and shoulders patterns to begin with. They're really where all the rubes look. There's no place where you can't find a head and shoulders pattern, either conventional or inverted. They're everywhere you want to see them, and everybody sees them and uses them, and that's why they never ever work. Um, Almost never. But for and here I was sort of buying the idea that we'd have a head and shoulders rally up to here, when just a week earlier I'd been putting out as more or less a certitude, a certainty, a 14,000 target. So just to sort of get back in the ball game, I said, let me do my 14,000 target one better and show you how Bitcoin gets to 9,000, which is where I think it's going, but I don't think it's going to end there. I don't think, I've asked, nobody ever answered the question for me, really basic question, the question, why should Bitcoin be worth anything? And it was not even a question of getting bad answers for that. I didn't get any answers at all. And as far as I could determine, and this is just using common sense really, um, the sole reason for Bitcoin's fabulous valuations was scarcity. And if scarcity is money, then maybe I got all my economics lessons wrong. But that seemed to be the only thing that that should give Bitcoin value at all. And so anyway, I asked someone, I guess smarter than all the people who have made so much money in Bitcoin, why it would be worth anything. This is a software developer friend of mine who's done very well over his life, and he has good answers to every question I ask him. So his answer, Craig, why should Bitcoin be worth anything? He said because it has the ability to record transactions in a secure way, and that's great. My reply to Craig was, I think you've hit on something that should give Bitcoin value, and the blockchain concept. There's nothing wrong with that. It's a great way. It's a great method of accounting, but in so much as Bitcoin mainly facilitates secure transactions, shouldn't it be worth more like $3 or $4 rather than $69,000 at the top? And I'm not quite sure it should be worth $3 or $4 because, as you know, no one's figured out a way to do these crypto transactions as as efficiently as your Mastercard or your Visa. So yeah, I'm a big believer in blockchain, and even they're using blockchain technologies now to reorganize the web, at least in theory, so that the big the jagoffs like Facebook and Twitter don't dominate. That people operate their own encrypted little niches online, essentially meeting, uh, using the blockchain to keep out people or to make collective decisions about whether they want to raise money for some project or do this or that. So this is called Web3, and the irony, Web3 is all about decentralizing, uh, keeping big companies from dominating. And the oddity is that in order to interface with a lot of things that are online now, these third-party companies are springing up to allow you to do it directly, to essentially operate within encrypted, within your sort of micro encrypted web, your realm of the web, to interface with the existing Web 2.0. These companies are springing up that make it easier to do that. So it sort of goes against the initial glorious idea of the Web 3 proponents of we're going to be decentralized. But one of the cool ideas that exists within the Web 3.0 is something they call um, what is it? It has a really cool name. It's not fractional voting, But the way it works is the big guys can't dominate because if they get out there and start rallying the troops to vote a block on a particular question, the more votes you aggregate, the less weight each vote tends to have. It's called, what is it? It's quad not quadrational. Maybe someone has the word, but it's I think it begins with quad voting. But again, the concept is that that the more votes you can pile into a particular onto a particular question, an issue, the less weight those votes will have. So it keeps the big guys from dominating. And I think it's a great idea. And you can see where it would have applications even in the general election in politics. Um, all right, so that's about as much as I have to say about Bitcoin and crypto and all that. Um, but I just don't. I never saw where the value was, other than the ability of cryptocurrencies, the blockchain currencies, to record transactions in a secure way. But credit cards already do that reasonably well, certainly better than crypto. And if you're thinking, well, crypto is even more protected, more secure than the credit card systems, you got another thing coming to you, because people who say that seem to think that the protection is against the U.S. government and the IRS, like they won't be able to find you, right? All right, so getting back to uh, all right, Crash says, thank you for Crypto 8 update. Wondered if the cult would ever die. They ain't dead yet. As I told you, this woman, Robin, who got me into her little Tupperware venture, I got myself into it. She's hopeful. She says, Rick, just hold on to your collaterals because it'll come back and you'll be able to cash out. I just didn't want to hammer her any more than I had already. All right, Bonnie asked for Anglo Gold, um, global gold mining company, and that's a pretty popular stock. And there's not much I can say to encourage you. The pattern that I would use to get a handle on this is right here. And this is a giant screen I'm using, so it's a little clumsy getting TradeStation to give me the highs and lows. Let's see if I can beat it in the submission here. All right, so we go up there for that high. I can't get it. All right, let's see. I still can't get it. There. No, I still can't. I give up. You know, TradeStation doesn't want me to have these highs and lows. And someday artificial intelligence will reach its pinnacle where it will sense, it'll read the bar before and after, and it'll make the actual low bar here easier to grab. But of course, we're shooting much higher for driverless cars that are never going to happen either. All right, so spread it out a little bit. All right, so looking at Anglo Gold, really the crown jewel of gold stock ownership. I can't. Oh, there we go. Finally. All right. So, all right. So it's struggling to hold that midpoint pivot. And this goes with what I said earlier, that as crappy as gold has been forever, almost, the bears aren't really enjoying it either. So they're trying to crack that midpoint pivot, and they've done it a little, but technically Anglo would be a short if it rallies to the green line, $17 exactly. The stop loss would be 1841, and you'd be playing for a fall to 1282, which is where I think it's going, although we haven't cracked P, the red line there, decisively enough for me to guarantee that. And I know everybody, we're always looking for guarantees. Um, Owen wants to look at MCI, August natural gas, MBT, Bitcoin. You got about 11 things there, Owen, but let me see what this MCI is. That sounds familiar. Bearings, I guess it wasn't familiar. Bearings Corp investment. And let's see a little bit more of the chart here before I throw away caution. All right, so real impulse leg there, super duper impulse leg, even though it kind of sausages out relative to these guys. And let me see something. I don't know if you're in the room there, Dave, but how do you like buying down there? All right, so someone asked about why I used never the marquee high, but the one off. And I posted a lengthy explanation in the chat room if anybody's interested. All right, so I think we're going to 1330, a little more downside here, but this is definitely in a speculative buying range. Well, I can't get TradeStation to slide the chart a little bit to the left. Thank you, TradeStation. Now I blew the whole pattern and I'm going to abandon this little project. TradeStation, when you try to grab, when you, let's see what I was trying to do. When you try to, let's see, it grabs onto one of these bars even if you're like a million miles from that bar. And so I just destroyed the whole pattern. Art asks, where do you see the NASDAQ futures bottoming? Let's take a look at the mini contract, the June. Actually, you know what? Let's take a look instead at September QU.22. All right, so not a pretty picture here of the NAS, and you could say that the fangs have finally gotten their comeuppance. And we had a beautiful bounce there. The initial time it came down to the target, seven to whatever it was, 11,751. The problem is, at that point, at that low, we had reached the we'd maxed out a pattern that began, on January 4th there. So here we've got 5 months of downtrend, and the first pop it hardly goes anywhere at all. It's not like this is some sort of short panic, the short covering panic that drives it up to here, where everybody's saying, "Uh-oh, we're going to new all-time highs." It didn't even fake anybody out in that way. It's supposed to, but it didn't. So it came down here, and the only reason that you got the second rally at all, which beat the first rally, is that all the drillers and the village idiots, that as soon as it breaks that line, they all turn stone cold dead bear. Everybody's a bear right here. So that's why you had this rally. Don't mistake that for anything bullish. It's just it's pure short squeeze. Look what happened, a couple weeks like that, and it crashes that low again. So that's what I was saying earlier about the bounces are just not doing what they're supposed to be doing. So we really need exhaustion selling to wipe all the hopeful bulls off the face of the earth before this thing is going to give us a decent short squeeze rally. And again, that's notwithstanding that little trade that I gave you um, in the E-mini S&Ps that I said had triggered, but we weren't looking for too much on that. It was just based on a guy who comes in the room now and then and does a little voodoo, says, hey, we're going to have, you have to buy the E-mini S&Ps for a fabulous rally on that begins either the 15th or the 16th of June, or 16th at the latest. And not that I am sold on that idea, to put it mildly. But if you can just test it, if you can play with it and make a little money, if he's wrong, why not? All right, so this thing, you can absolutely get in there and bottom fish 10986 with a tight stop loss, and I don't think you have to do anything fancy like a mechanical setup or whatever, because the pattern I'm using is unknown to everybody else in the galaxy. Um, this we're using a one-off A that no one else sees. and a couple other ideas are in play here. So I think you can bottom fish 10986 with just a really tight stop. By really tight, I mean 4 points maybe. We could get a little tighter if we did the work and came in on the 1 minute chart to do a camouflage trigger, getting long with an ABCD pattern on the 1 minute chart. But since many of you will not know how to do that, this is a straight bid 10987 stop 10982 or 3. But keep in mind, if it does take the stop out, if it cracks that, and in particular if it closes below the red line, you better believe we're coming down to 10199. You could bottom fish that too, because again, nobody knows, on earth sees the pattern we're using. Let me sort of take it away. Well, we're playing a little stick up bar there instead of the one everyone else is using, and it gives us a much more precise handle on where we should do this trade. Um, Chris wants to take a look at Amazon, and I did explain in a couple contexts. One may have been our Wednesday session, or maybe something I wrote in the chat room or somewhere. But everybody, splits are for the rubes, really. Splits are, and even the bozos who write about the markets for our mainstream newspapers, they always think of and write of and speak of a split as being bullish. It's not. It's bullish in a bull market, but the basic idea behind a split is, with Amazon trading at $2,300 a share, how are we going to unload all our stock on widows, pensioners, and orphans? So the answer is to split it so that it comes down to their price range. So the only reason a stock like Amazon gets split is so that it can be distributed to suckers, and that would not be the game, obviously, unless the big guys thought the stock was going lower. So, and I guess, why would Amazon be going lower when they dominate the retail landscape? And I've talked about reasons in the past that are as imaginative as in a recession, when everybody thinks, well, geez, we're buying everything from Amazon. Can't the government regulate the monopoly prices they're charging us? We haven't seen that come to pass really, because Amazon, I think, has held the line on prices, but it's at the expense of their vendors. So with fuel costs up where they are, you can imagine the vendors are really taking it on the chin here, as far as they're the ones who pay for free delivery, not Amazon. So as the higher fuel prices go, the more difficult a trick it is to accomplish free delivery. So that may be what finally breaks Amazon, but there are any number of things that could do it. So when you look and you see a 7160 target for this thing, and you think, well, how can a company that owns the retail globally, and which is building a warehouse in every little, I mean, they're going to be, you divide America into 10-mile grids, a grid of 10-mile blocks, and there'll be an Amazon warehouse in every one of them. Um, how could it get there? Well, for the couple reasons that I just mentioned, but others that maybe we can't foresee or imagine, but it'll get there. So far, I can't guarantee that, because it's doing what you might expect it to do, which is to hold the midpoint support. But if it closes for 2 consecutive days below that red line, or it thrusts decisively below it, let's say to, well, let me get this thing going here, to 94 or so, it's going to go to 7160. So you can imagine that's deflation at work. By the way, I know we still have inflation and everybody talks about it, but you know that when everybody talks about it, it's time to start thinking about the other argument, which, as those who've been with me know, I've been thinking about for 30 years. It's mostly served me well. I knew that that the Fed was never going to tighten, because the real enemy, the real threat was deflation, not inflation. But yeah, we've got the sort of consumer inflation going right now, that even when the debt bubble implodes, putting massive weight on inflation, it's going to take the consumer thing a little ways to turn around. It may take months really for people to figure it out, that the consumer is dead in the water and is not buying anything any longer, and with no with demand shriveling up, how much inflation can you have? But we may so that may take a while. But as far as the impact, the deflationary impact of much bigger things than increases in the price of cars and food and everything else, we have the strong dollar. It's gotten whacked today. It would be a mechanical buy if it comes down to the green line 10102, but it's just coming down really in sympathy with oil. Oil's gotten hit, and that might be the break in inflation there, um, because um, oil. I was working on a 127 target, actually a higher target, bigger pattern of 140. So um, we've got Matt's curse operating here. A failure at the secondary pivot means we could break below this line here. So if that's the case, we may be seeing oil kind of beginning its deflationary bust, which is based on the fact that consumer and manufacturing demand for energy resources is going to be greatly reduced in a world that's flat ass broke. So maybe that's what's happening here. The jury's still out. Um, Either way, it's lose lose, because if oil is finally broken, and with it the dollar, the damage has already been done, and uh, and there's just no way out. We're already in deflation. All right, so back to Amazon. I think I actually covered Amazon. All right, so let's say look at our next request. Gold is showing a double bottom. A double bottom. The dollar just broke support, so that means this is the long-term bottom. Could be. I mean, really, when gold, if a big picture change would mean yes, bullion has finally bottomed, crude has finally topped, and so has the dollar. So you're right. This could be the beginning of the tectonic shift that we're seeing right here. All right. Let's see. Another question from Dean. And Dean, I want you to get out there and review me on Trustpilot, if you will, please. Those of you who haven't reviewed on Trustpilot, I would I would feel most grateful if you would go out there and put a nice 5-star review out there. Um, and you can request a link. You can do it just by joining Trustpilot, but a lot of people don't want to do that. Just send a note to Rick at rickackerman.com saying, send me a review link, but only if you're going to leave a good review. I mean, you can read the bad reviews and see kind of where they were coming from if you want to be amused. All right, so let me get back to where we were here. Dean, I sent you an email relative to Edwards and McGee. I asked whether you have that book. I've got Edwards and McGee. I actually donated my old Edwards and McGee when I moved from Colorado. I basically sold 1,000 books, and not sold. You can't sell books. You can only give them away. And in this case, I donated it to the Denver University has a course that's funded by one of the by Morgan Stanley or somebody that teaches trading. So I donated it to that, and I found a copy of Edwards and McGee um, in a remainders bin in some little obscure town in North Carolina. Um, let's see. CF, if time permits, AMR supplies metallurgical products to the steel industry. So let's take a look. AMR. And for some reason, we always get a request for this. It doesn't look good. There's a lot of weight piling on up top, but increasingly distributive rally. And we've got this impulsive move coming down. And I don't know. I can't, I have nothing good to say about AMR, except that, well, believe it or not, this little guy, this low, exceeded this low, this external, by a zillionth of an inch. So that makes all of this a legit, this is a legit impulse lag, and therefore a viable pattern for projecting price. And it looks to me like it'll come down to a minimum 143.96. But if that doesn't hold, you may be looking at the lower target, and I'm not gonna. What a pain in the ass this is. Let's see. All right, we have to take that off. We have to squeeze that. Could come down to 130 and change. Um, all right. What about oil? Still on track? All right. I think I've talked enough about oil today. Um, XLE Energy Select Sector Fund. That'll be interesting to look at. So let's see what XLE is doing. All right. So get rid of that. 2 clicks, 3 clicks. We're back in the game here. Let's see. Well, I guess now we have to go back 1 click, 2 clicks, undo that. All right, and this was impulsive, I think, as we agreed, and it's overshot the target of this pattern. It looks like A, B. Thank you, TradeStation, for that delightful B. Let me see if I can put a chokehold on it that gives me the actual B. What a piece of crap. All right, hang on. All right, so it overshot D like no sweat. So that means we've got to move up to a higher A to project a lower D. So we'll move up there. And yeah, you could be buying it speculatively down here. You should be actually, because the target was 77.43, and we've actually been as low as 77.70, 27 cents. So yeah, this is a spec buy here, but do it in a way where you'll make a little bit of money if you're wrong and this thing collapses. It's not a good sign that this whole downtrend has gotten past these major external lows right there. So it wants to test this low down here around 75 and change. And looking at an even bigger picture, it wants to get down to testing these very important lows at 71. So that's where it's going. CHWV, Chewy, is an American online retailer of pet food and other pet-related products based in Dania Beach, Florida. Chewy also, according to something I read a day or two ago, is the number one company in America rated for consumer service, or the number one institution. They rank the first in the country at giving their customers satisfaction. Take a guess at what was dead dirty last, and I think there were 223 companies ranked. Take a guess who has the worst service? The IRS. All right, so but Chewy's come down with the pack, and I don't know whether it's because people are eating their pets or just not feeding them or something. I don't know. But all right, so, and I guess, to get that high rating, it means that they're not packing their dog food full of polyvinyl chloride and all the other fillers that the Chinese typically use in foodstuffs and food products. Baby formula. Anyone who gives their baby Chinese formula is probably they've done the vaccine, the jab, and 6 booster shots, even for their 5-year-old kid. All right, but enough politics. All right, it looks like this thing is, it wants to go to at least the midpoint pivot, 30.85. And if it pops through that, it's on its way to recovery because it's going to take out these externals right there. But I'd say real cautious until it gets to above 30.85, but it has a promising impulse leg to accomplish that. Question from Sam, URA. It's a uranium stock ETF. And uranium, like coal, has been on hold for the last 40 years, but it's coming off a somewhat encouraging rally, but it's on a whole new track now. Let's take a look at an even bigger picture. All right, so this puts this big rally that we're having in perspective, and the high, did it get above that external peak right there? Well, let's find out. 3152 versus 3160. So that's good. That makes all the difference in the world. We read these things the same way Elliott wave guys do, which essentially means that we know the difference between an impulsive rally and one that is merely corrective, in this case, relative to that little high right there. So this is all very encouraging, but the weight of all this wants to come make it come down lower, just so that it can get a running start on the next move up. So it looks good, but I think it's got to take out some of these lows, this one here, before it can rally. And of course, we trade that using what we call a reverse pattern or a counterintuitive pattern. All right, let's see what else we have here. Uh, Bitcoin holding, Mr. MSTR. All right, so let's take a look at Mr., which has a lot of Bitcoin. Looks pretty good. What can you say about this? All I can say is it don't look good for Mr. And your guess is as good as mine as to when the selling will end. But you can imagine how many people. All this is offloading, onloading, a lot of new guys getting in, old guys getting out. But that's all supply. I mean, it's huge supply, and it doesn't start up there. It starts down here with that last low where you built a bull trap right there. So all this is very trappy. So, and that's what I was saying earlier about Bitcoin now trapping so many of the unwashed, that the deplorables, that you can forget about some huge rally or a short squeeze, which would at some level be propagated by the big guys who are on their asses too now. All right, so let's see. Someone, as soon as you mentioned someone in the room with voodoo, my sound dropped. I watched from a short to long and got hosed bad. Nothing I can do about that. And you should be aware when you're in the chat room that some of it's voodoo, but it has attracted its fair share of skepticism. The people are asking questions. Spartacus for one, about how about showing us some charts and a little bit of your rationale. We know from the last charts that were provided by the same person that nobody can make hide nor hair of them. But anyway, I'm willing to at least test the water with that bid I showed you in the E-mini S&Ps. Let's see if it's making money. I'm so excited if it is. Probably not, though. No, the mini S&Ps are just a few points off their bottom, so we're not going to find much in the way of profits for that trade. Now, all right, so, all right, and I can't even remember where we got in. It was 367 something. It's possible, well, maybe we got out of half of it. I don't know. Um, all right, so let's see. From here, I thought we had or have a law on the books such that there is only or will only be one currency in the USA. Bitcoin and all their similar substances are legal. The real issue is, why has the US Treasury not put some people in jail? Just save your breath, Dean. I worked when I was traded on the Pacific Exchange for a dozen years, and there was a guy, pretty successful trader named Jim Henry, and he had this very interesting idea. When they started listing all of these derivative vehicles, um, and it to some extent puts and calls are derivatives, but when they started listing contracts on things that weren't even traded, he said, this really goes against the blue sky laws. There's nothing real that's being traded here. And I think his idea then was to just sort of push the regulators to make the markets honest. to not offer all these products that were just simply fabrications. They were, trading vehicles conjured up from the virtual world. And I don't need to tell you that Jim's war to bring about uh, rationality and fairness to the markets was it never went anywhere. Um, and ditto anything that you might do to impel the regulators to only allow trading that's actual trading. You come at high speed trading with the chiseled in concrete idea. That's not really trading. Nobody's at risk there. They're not putting up bids or offers that can actually be hit. They get out of the way at the speed of light. So the high speed trades are essentially, they don't fulfill the number one obligation of a real trade, meaning that there's some risk there. Do you think the regulators gave that much thought? No, it turns out that anything that would suppress volume in any market is never it's never going to be given a serious thought, because these guys are all like politicians. The more developers they let in the door, the bigger the kingdom over which they preside. So every small town wants these developers to come in and put up some building that the town councilman can they can put a plaque on a corner. So that's what all the regulators do. They like the enchilada to be even bigger, because that's essentially their fiefdom. It's what they do. It's what they control. It's what they regulate. So why shouldn't they want things to grow and grow and grow? All right. Managing editor of the newspaper that I work with, coming right out of college, a guy named Bob Ebener, he had it so right, but he said when they name these bridges after politicians, they should name them after the taxpayers who paid for those bridges. For anybody who's ever driven over the Assemblyman Dolores Cooper Bridge that connects Longport and Summers Point in New Jersey, you'll know what I'm talking about. View on DXY. I did look at it earlier, but I'm sort of wondering if the watershed change that's going to the dollar, I don't think has a choice ultimately, an alternative to going higher, simply because that's what happens in a deflation. But let's take a look at the really long-term chart in a dollar and see what the horrific sell-off of the last couple of days actually looks like. All right, let's get rid of this crap. All right, that's what it looks like. We had an absolute mechanical buy there that didn't get stopped out. Um, I would say minimum upside over near time to 106.79, and that is, I think, close to the target that I've got out in the current tout. But more robustly, 112.97, this would be a buy if it comes down to the green line. That's 94 and change. And at that point, everybody was saying it would be saying it's over for the dollar. But in hidden pivot terms, no, that's a place where you want to come in and buy it. So we'll see. But all the selling that we've had the last couple of days in the dollar has only brought it to the middle of the gains of this month's gains, or this month's high and low. All right. So you can see there's really nothing to worry about in the dollar chart here if you're a dollar bull. And this last rally got past one internal, God, screw this thing, got past one internal there and a major external. That's practically, it's it's technically an internal peak, but it's a major enough that we'll call it external. It got past this internal here and that one there. So this rally is impulsive, and it means that however much it corrects, it's going to take another leg up. All right, so quad venti on pump maca. No idea what that means. One pump maca, quad venti. I don't know what that is. All right, Devon Energy DVN. All right, and that's impulsive. This is it's interesting. I don't know whether this is going to be a fake out. Well, maybe it's not impulsive. Maybe it gets stalled. Now, it's not impulsive. So this could be a major rally about to fail, meaning maybe this thing has finally had it. Um, been quite a ride though. We're coming to the end. Best option play today on DXD. I don't know. I don't really. It'll take me a few minutes to figure that out, David. So I'll leave that up to you, or come in the chat room and uh, and offer to pay someone to do that with a free lunch. Speaking of TUP, shorted it from 19.3, covered great. What do you see? I don't know. If you're trading it profitably, that's enough. I can't improve on that. CCG, uranium, ongoing deflation pressures should yank this back. Let's take a look at CCJ. Um, let's take a look at the weekly. And it was a mechanical buy, absolutely, at 23.64. It's underwater. If it doesn't convert this into a profit, meaning get to 27.25 and cracks this first, it would be a sign of a major reversal in CCJ. We looked at AU, MCL oil. Wait, you've had your request already, so let me see what else we've got here, because I do want to get through this. Um, uh, EURN, Euronav, International Shipping Enterprise. Always interested to see what the shippers are doing. Let's see. It's just sort of bogged down here. May have shot its wad with the move to 14. I'd just be careful if it. Um, I'd be a buyer, but only with a reverse pattern, maybe under $10 a share. But I would hold off here. Um, let's see. US dollar, we did that already. Can you go to EP chart? I don't know what that is. EP. What is EP? Is that, do you mean a symbol like EP? Empire Petroleum. Um, it may have shot its wad as well. That high up there, thank you, Trade Station. B, C. All right, again, with a lot of this stuff I'm putting up here, I'm going to show you how to access a course that will tell you everything you want to know. All right, well, this is bullish for EP. It overshot a pretty obvious D target there. Um, and but I wouldn't get too hot to trot here. You know, I'd be a cautious buyer, meaning a buyer according to some method, not based on this bullish idea that it looks great. All right. Newmont is going to be like every other gold stock, so I'll let that go, David. TLT, we already, well, yeah, I can look at TLT. We're running out of time here, and I do appreciate that nearly everyone who began this session is still here, but it's starting to, I'm going to wear out myself. So TLT, no, I already said that I thought it could come all the way down to 99 and change, and we talked about interest rates there. So just check the beginning of this video. Warner Brothers, let's see what that's doing here. Warner Brothers. David, you're clobbering me here. All right, so Warner Brothers is going where good movie companies should be going, to zero. I've covered why the movie chains are all going out of business, and the only reason they're surviving is the same reason bank branches are surviving. As a real estate concern, the owners don't know what to do with those buildings. So the only reason you have an AMC movie chain with how many thousands of screens is because they can't figure out what to do with the physical properties. But trust me, nobody is going to the movies anymore, and the food concession is not a big winner. All right, so let's see. July grains. Oh gosh, I don't know. I don't want to get. I'll do one July grain. Um, Corn. Let's see, corn here. It's holding up very nicely, meaning it, it's going to crush consumers when it translates to higher prices for everything we eat. The breakout above P is bullish and portends speculatively $8.49 per bushel. um, let's see, platinum PL, I don't know, July maybe. Platinum is looking great like gold and silver, uh, not. Um, SDS ultra short S&P 500. Yeah, looks good. We've already covered the S&P, so I'll let you interpolate for this. Uh, Exxon Mobil, let's see. Yeah, it looks like it's past its sell by date, and you may have seen the Exxon's best days may be behind it. Uh, where to hide, Rick? I've covered that in my interviews. Just tune into Hal Street with Jim Goddard, and you'll get the answers to that question. These classes are excellent, and the tutorials are helpful and superb. All are much appreciated from Francis J. Thank you, Francis. JVA got stopped out of this piece of, I guess you meant shit, but you typed exclamation points. Um, Thank you, outstanding session. Thank you. All right, so I want to show you, I've been talking all along about this, the system, mechanical method for nailing these trades. So let me show you just a little dog and pony show that my marketing director, Dave Williams, prepared. All right, the mechanical trade system. By now, you should begin to understand that it can, let's see, that beginners can trade like pros, kind of. I would say if you use the mechanical system to trade options, you're going to be trading better than pros. And I say that I've been an options trader myself for 45 years, and I know a thing or two about them. And I can say, and since I don't like to lie about such things, I can tell you that if you apply the mechanical levels to trading options, you're going to leapfrog the knowledge that people who've been at options trading for 30 years have accumulated. And I know that's not a very modest claim, but it happens to be true. As people who have watched some of these things develop, especially during the Wednesday sessions, uh, they could tell you as much. Yeah, you can start with as little as 3,000 bucks, and if you want to practice trading single share lots of Amazon, you can do it. You can get to the point where you're making an average of $40, $60 every trade with the single share of Amazon, and you step it up to 2 shares. And at some point, the whole thing about trading, if it works in a small way, it will work in a big way. So if you find you're making a steady $200 a day in Amazon, you simply scale up the number of shares to whatever you want. So you can trade even Amazon with a basic account, 3,000 bucks. Um, the markets are running round the clock, so you can go 24/7 if you or can't sleep one night and you think, screw it, as long as I'm going to be tossing and turning, I may as well make myself 800 bucks. Just get on one of these E-mini charts. We Liquidity is going to be a little bit more of a problem, but the nice thing about in the wee hours, but the fabulous thing about the mechanical trading setup is that it allows you to enter the trade with a limit bid, or if you're getting short, a limit offer. That's a big deal. You won't have to deal with slippage, and you can really trade at night. Things are thin, and you're really up against some of the sleaziest scumbags in the whole world of trading and in the financial sector. These are guys that you would not even trust to babysit your pet reptile. You wouldn't no, you would come home and the terrarium, there, there'd be blood in the terrarium. All right, so anyway, um, you can use the trades just pop up everywhere when you're using mechanical levels. You can say, I want to trade this stock and I want to trade it now, and trust me, there'll be a trade there for you. Um, Risk literally pennies per share. Yeah, and start trading in just a few weeks. You can do that. You really can. You just get your ABCs down, and this is something the mechanical uh, setup is not only easy to learn, but you can start actually using it relatively quickly compared to any other trading system you might learn. Okay, all right, so here's the package. We've got all these goodies. The mechanical trading system I offered as a mini course for I think 499, 497, let's say. The fundamentals of the hidden pivot method that will give you the basics, which you can apply to any one of our trading entry methods. The mechanical, the counterintuitive, the reverse ABC, whatever. You'll get a 3 month subscription to Rick's Picks, which on a monthly basis is $177 value. And my personal best choice here for value is the 6 tutorial sessions. That's a quarter's worth of them, or 3 months worth. And these tutorial sessions are where it happens. We try not to have these things be just chalk talk. I'm really in those sessions finding trades in real time and saying, yes, this is where we should pull the trigger. And I'm trying to recruit me someone who to actually do the trades in real money, because I can't chew gum and breathe at the same time. So we'll do the lessons, and the things that happen in these sessions will leave you astounded as to what the power is of the mechanical setup. So total value $846, and the only place where my marketing chisels a little bit is you can get a 3 month package here, I think, for $106. So it overstates the value of that by $71. But otherwise, still not bad. We're still up to 700 and some dollars. But I'm offering the whole thing here for $397, next 24 hours only. So if you want to take advantage of this deal, that you go simply to rickackerman.com/24 deal. So um, I again, if you don't believe me, and you think, well, I don't know, just come in the chat room on a free trial, which you can get by going to the home page, clicking on free trial, and just ask around. You guys making money? Does this really work? And I think when you have that question answered, you will be eager to jump on this deal. So it is a pretty good package, and I'm always telling my marketing director Dave, just stop lowballing me. um, these things are worth every penny. The $800, whatever it was, that I'm charging. I have only raised my price of Rick's Picks for Rick's Picks once in the last 20 years, um, but it's a great deal. So if you're interested in signing up and sort of getting rolling, reorienting uh, your whole perspective on trading, this will happen literally in a couple of hours. You'll see charts in a different way, and you'll trade in a different way. If all that interests you, absolutely, you should go to rickackerman.com/24 deal. So jot that down, and put the slip of paper under your pillow overnight, sleep on it. But you've got 24 hours to take advantage of this deal, and it's it's really too good. Dave, we got to raise the price on this. Um, that's it for now, and I want to thank you for joining me today. It's been a good. I hope you come away from this with things you can use to make a little bit of money. That's really why we're here. Um, and I think I've handled all the questions. Dave, let me just ask you if you have recorded the issues that I've covered today, so I don't have to make a list of things. If you fell asleep today, or if you're not here, You'll be able to review everything that I covered in recorded form because this session's, but again, it's timely. A lot of stuff that I put out there is very timely, some even crucially timely with respect to, what are bonds going to do, what's the dollar going to do, or is the E-mini S&P going to fall any further? So that's about it. Okay, Dave, thank you. That's it. I'll see you back in the chat room, or maybe in the chat room after you've taken this this course offering that I've made. And chat room's a great place because everybody speaks the same language. It's not a Tower of Babel thing where everybody's got a different technical idea. Here, the vocabulary is the same. And in that room, at any given time, there are a whole bunch of Zen masters as far as hidden pivot, using the hidden pivot method is concerned. So I think it's the best trading room on earth. It's certainly one of the friendliest and most helpful. So be sure to stop by and say hello. And with that, I'm going to wish you all happy trading and a very pleasant good day.